Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2025, and we're diving into the latest earnings report from Six Flags, North America's largest regional amusement park operator. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Six Flags' third quarter results, which have just been released. There's a lot to unpack, from revenue figures to strategic initiatives, so let's get started.
Revenue and profitability overview. Let's start with the top line. Six Flags reported net revenues of $1.32 billion for the third quarter of 2025, which is a 2% decrease compared to last year. Despite this, attendance increased slightly. John, can you shed some light on these figures?
Absolutely. While the net revenue saw a slight decline, attendance actually increased by 1% to 21.1 million guests. This indicates that while more people visited the parks, the revenue per guest decreased, primarily due to a drop in in-park per capita spending, which was down 4% from last year. The net loss of $1.2 billion is largely due to a significant non-cash impairment charge of $1.5 billion on goodwill and other intangibles.
And what about profitability?
Adjusted EBITDA came in at $555 million, down slightly by $3 million from the previous year. This was mainly due to lower revenues, although the company did manage to reduce operating expenses, which helped cushion the impact on EBITDA.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Six Flags reported a decrease in operating costs and expenses. What were the key drivers here?
The company reported operating costs of $772 million, a significant decrease of $122 million compared to last year. This was driven by reductions in full-time and seasonal wages, as well as lower insurance costs. SG&A expenses also saw a substantial decrease of $97 million, largely due to reduced merger-related costs and advertising expenses.
And looking ahead, what is Six Flags' outlook for the rest of the year?
Six Flags has updated its full-year adjusted EBITDA guidance to a range of $780 million to $805 million. Additionally, sales of 2026 season passes are up 3% compared to last year, which is a positive indicator for future revenue.
Strategic initiatives and market position. Six Flags has been making strategic moves to enhance its market position. Can you tell us more about their recent initiatives?
Certainly. Six Flags has announced a branding partnership with NFL superstar Travis Kelce, which aims to enhance shareholder value and modernize the brand. The company is focusing its investments on high-return properties and improving guest satisfaction, which has been a key area of improvement across their portfolio.
How is Six Flags planning to tackle the challenges in underperforming parks?
They are prioritizing investments in their most established parks, which have been performing well. The strategy includes sharpening marketing messaging and strategies to improve the value proposition of all parks, ensuring a return to EBITDA growth.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of $2.32. How did Six Flags perform in this regard?
Unfortunately, Six Flags reported a significant miss with an actual EPS of $11.77. This was primarily due to the $1.5 billion non-cash impairment charge, which heavily impacted the bottom line. The forecast was based on estimates from 6 analysts, and the miss highlights the challenges the company is facing in terms of profitability.
What does this mean for investors?
While the EPS miss is concerning, it's important to note that the impairment charge is non-cash and doesn't affect the company's cash flow or operations. Investors should focus on the company's strategic initiatives and future guidance, which remain positive.
Key takeaways. As we wrap up, let's summarize Six Flags' performance this quarter. Despite a challenging environment, the company has shown resilience with a net revenue of $1.32 billion and an adjusted EBITDA of $555 million. Looking ahead, their guidance remains strong and season pass sales are up, indicating a positive outlook.
Indeed, while there are challenges, Six Flags is making strategic moves to enhance its market position and improve guest satisfaction. The partnership with Travis Kelce and focus on high-return properties are promising steps forward.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Six Flags performance in the comments below.